It is Thursday, September 10, 2020. Actually, it just became Friday, September 11, 2020 in my time zone. But this is my Thursday episode. Episode number 67. You don't pay 50% tax. This is a late one. I had to spend a long time getting this spreadsheet working. All right. This is the 39.6 Facebook Live Finance Show. The show that teaches high earners like yourself how to make your money work for you so you don't have to work for your money. We talked general investing, taxes, real estate, syndications, and even the car you drive. All right, this is episode number 67. You don't pay 50% tax. I don't know how many people I have heard say, I pay 50% in taxes. Okay, no. Nobody pays 50% in tax. Actually, no, that's wrong. Not nobody. Almost nobody in the United States of America. In other countries, 50%, yeah, sure, maybe, but not in the United States. We have a progressive tax system, and with the current federal tax brackets, it is very hard to get to a federal or actually a total income tax rate of 50%. Now, I'm not including sales tax, property tax. I mean, you could own a $100 million home here in Dallas and be paying $1.5 million a year in tax. Okay. I'm talking about income tax. So it's always funny, some of these threads on Facebook groups. Somebody put some anonymous post about how they make all this money and are broke. Okay. Or they don't make much money and they want to spend and buy like a house that's worth 5 times their income. And it's just painful to watch this. And then there's all these comments, literally hundreds of comments. And it's just amazing to see what comments there are. This one post in the Physicians on Fire Facebook group had talked about, anonymous post, somebody working out east making $300,000 and can't get out of debt. Like, can't get out of credit card debt. And it's $300,000. Now, I don't know what state the person lives in, but they live somewhere out east. A lot of people said, you have to move out from out east and move somewhere cheaper. And a lot of people said, yeah, you're paying way too much in taxes. You're paying like 50% of your money in taxes because you live on one of the coastal states like New York, New Jersey, or California. And I looked at the listed expenses. The expenses were $6,000 plus $4,000 a month in credit card payments or credit card and other debt payments. So that was like $10,000 a month in expenses and $25,000 a month coming in. I don't understand how the person can't get the debt down if there's a delta of $15,000. People are saying, well, the person's paying almost all that money is going to tax. And so there's no money left. I'm like, that doesn't make sense. If you're making $25,000 a month, yeah, you're paying tax, but it's not $15,000 a month in tax. That would be 60%. And it's nowhere close. But so many people mention paying 50% in tax. And that is just so not true. I posted my federal tax bracket graph that I post all the time. And a person said that it wasn't accurate because it doesn't include state tax. Well, there's 50 states and I don't have 50 graphs. But state tax, even in a high tax state, is usually not more than like 10%. So you can just like add 10% of state tax on top of it and still calculate your tax. People still didn't believe me. So I went into Excel, and once upon a time, I was actually pretty good at Excel. I could make a chart pretty fast, do my calculations, fill down, make whatever I wanted to for the most part pretty easily. Now Excel is like totally not the Excel that I used to use. And it is so much harder for me to make a basic graph. And my old version just kept on crashing. Like I would copy and paste and then like it would fill infinite number of rows. And then I had a file that had literally over 1 million rows of like autofill and it wouldn't open. Luckily, eventually it was able to calculate it and I was able to copy and paste and I like started from scratch. So here it is. That's why I'm so late today, because I just was so stubborn and would not give up and not get this done, even though I have a very early date today. Okay, so I did a calculation. I did the federal tax brackets for 2020. The person said, I asked how to file, like married or single, and then I realized the person had children. So we're using head of household. Okay, and so head of household and state of California. Okay, now California is very complicated because they don't just have like a couple of tax brackets. They have 0%, 1%. Okay, so the standard deduction for head of household is $9,000. So from there, after that is 1%, then 2%, 4%, 6%, 8%, 9%, or 9.3%. And that's when you hit like $87,000. Then it stays at 9.3% all the way until you hit $411,000. Then it goes over 10% to 10.3. Then you get to around 500,000, then it's 11.3. Then about 800,000, then it's 12.3. Then you get over 1 million, it's 13.3. So that's really high. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 tax brackets. A lot of tax brackets, more than there are federal. But most of the income spans like right around 9 to 10%, anywhere from 88,000 to 411,000. Okay. Which is why, if you live in a high tax state, you can usually just add 10% and it'll get you pretty close. Okay. And other states is often around like 6%. So like you're either in a no tax state at like 0, Texas, Florida, Washington, Nevada. I think Nevada. Then you're like in a regular state tax state and that's like 6%. 5% maybe. Then you're in a high tax rate state, like 10%. Okay. But to be accurate, I put out all the tax brackets and I calculated the effective tax rate and the dollars for every single dollar. This takes a while to do in Excel. It doesn't just happen magically. Then I used the head of household federal marginal tax rates, which are like 0%, then up to $19,000, then up to 33 and 73, 104, 182, 226, and $537,000 when you hit the top tax bracket. Okay, so I know you can't really read that, but I had to review that so I could see it. Okay, so here we get to, there's the ruined spreadsheet, and the final graph is all the way over here. Okay, there we go. So in red, this is the total effective tax rate. This is all taxes combined. So that's why it's the top curve. Okay. The bumpy straight line curve, like that looks like New York City and then flattens out. That's the marginal tax rate at any dollar you earn. It goes up pretty fast, up to around like 33%. But then it dips down after you hit the Social Security threshold at $137,700. So if you earn more than $137,700, you're not paying any more Social Security tax. So that Social Security tax is gone. Another commenter kept on saying, well, FICA tax is so high. Well, no, it's not that high once you're high income. If you're not going to have a super high tax bracket unless you're high income. And if you're high income, you're not paying Social Security anymore on those dollars. That's the beginning dollars. So it's not really that much on average if you're making a lot of money. So that's why it dips back down over there. Then the federal tax brackets go up to 37%. Now, the California state taxes, they go up here, and they continue all the way up this orange line. Okay. So then you add everything together, okay, and you end up with a total maximum effective tax rate. Oh, I'm sorry. This overall marginal tax rate here, this did not include California state tax. So the effective tax rate includes California state tax, and that is the red line all the way out here. Okay, so you look at this number out here, and the income at the bottom, I should have made the numbers bigger, is $1 million. Okay, so at $1 million, you are at an effective tax rate of 46%. Okay, so 46% at $1 million. Most people, head of household, are not making $1 million. Maybe you are, but most are not. And this isn't a high tax state. Now, the person posting had mentioned, I believe, $400,000. So at $400,000, you're paying Social Security tax, but you cap out around $9,000 of that. You're paying Medicare tax, which is 1.45% until you hit 200. Then it's 2.35% after that. So it ends up averaging around 2%. So that person's paying about $8,000 in Medicare and like $9,000 in Social Security. So $17,000 there. The state tax here is around $25,000, maybe $30,000. So less than 10%. This is about maybe 7-8%. Okay. So between the $30,000 and Medicare and Social Security, you are under $50,000 combined. Okay. Then you have the federal tax, and that federal tax here is going to be around 100, almost like 107,000. Okay, so overall, around $157,000 in tax on $400,000 of income. So that's not half. That is going to be around 38%, including all taxes. So 50%, very hard to get to. I didn't show the graph that goes to $2 million, but you have to get up actually over $2 million before you hit 50% tax. You get to like $2.6 million of income. And then at that point, $1.3 million of your income is going to Social Security, Medicare, state, California, and federal tax. Okay, so 2.6. That's a ton. Now, I tried to see if there were city taxes. I typed in some zip codes in Los Angeles. I did not see any city local tax income taxes. There may be some somewhere in LA or San Francisco. I wouldn't be surprised, but I couldn't find any. Now, if there is a city local tax, it's usually very small. It's not usually anywhere near the state tax rate. It might be like 1 or 2%, something like that. You can add that on. Is still hard to get to 50%. Now, what your paycheck shows you in terms of what's withheld from your paycheck is not your taxes. It is only an estimation of your taxes. Then you file your tax return at the end of the year, in April or October of the following year. And on that tax return, you put all the taxes that you have already had withheld from your paycheck, and you also put all the income you have had, and that should be taxed, and all the deductions. And then it recalculates how much tax you should have paid for all of those federal taxes, Medicare, Social Security, and federal, and then also in your state filing. If you get a return, that is a refund of overpayment of tax. If you don't have a return and you pay them money, that's extra money that you had to pay them that you did not withhold from your paycheck. Your paycheck is not your taxes. Okay. There's a lot of ways to adjust how much you actually owe in terms of tax liability based on different things. Cash balance pension being like the biggest thing out there in terms of mega huge savings from both state and federal. All right. So most people are paying nowhere near 50%. 40%, sure. 40% if you're making really good money. But 50% is really, really, really hard to get to. Now, these numbers are assuming you are an employee. If you are solo person, 1099, okay, it gets more complicated. You have to pay both sides of Social Security. So that's an extra $9,000 potentially. And you pay both sides of Medicare. So that also could be like another $8,000 in this situation. So that's another $17,000. Okay, so that adds another few more percent. However, if you're also a 1099, you can also do an S Corp, and you can stop your Medicare payments after your income and then take the rest as a distribution. So then you can decrease your Medicare tax doing that. So that makes another reduction of 2.5%. Then you can also throw in like cash balance pension and other things, especially if you're a 1099. Cash balance pension is fantastic. So you can bring your tax rate super low when you compare it to your total income. Like you could have $1 million of income and decrease it by $300,000, $400,000 in terms of taxable income and save yourself 6 figures in tax based on utilizing all the strategies out there. So, all right, that is number 66. No, 67. You do not pay 50% tax. This file will be saved on the Facebook group. Have a great night. Until tomorrow for episode number 68. This is brought to you by the 39.6 Facebook Live show. Sponsored by the Marriage, Medicine, and Money podcast. Launching this Monday, September 14, 2020. Available on iTunes, Google Play now. There is a placeholder there. Feel free to subscribe so you get an alert on Monday morning. You can listen to it on your Monday morning commute. Nothing you hear here is legal, financial, or any other advice. It is simply entertainment for myself. Maybe, hopefully, a little bit of entertainment for you. Have a great night. Until tomorrow.